following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best, but don't overdo. When you overdo, you deplete your body and you go against yourself, and it will take longer to accomplish your goals. Market-wise, let's take a look at it out here. We have the Dow Industrials up 54, NASDAQ up 51, S&P's up 14, gold contract up $1, $12.91.20 an ounce. Silver up 12 cents, $16.39 an ounce. Light sweet crude up 12 cents, $71.43 a barrel. Light sweet crude just won't give it up, folks. They want that $75 price. Notes and bonds. You get the 10-year note down 2 ticks, 118.17. 30-year bond off 5 ticks, trading at 140.29. We get the 10-year yield right now, 3.093. Bottom line, it's a big yield. No two ways about it. King dollar. What do we have with King dollar? King dollar is going to get intriguing in the next few days out here. Why? Because King dollar did finally reach the highs of December 12th of 2017. Thus far, coming into the close out here, hasn't been able to hold that high. The intriguing thing, which is so wild, just technically in markets, it's like, okay, how does this work? You wanted to get up to that price point. Took a good period of time to get up to it. Bottom line, you got up to it. Now, what are you going to do? Now, what's intriguing about King dollar is this. So, when you're looking at the swing high that was established out here on December of 12th of 2017, that's sticking out like a sore thumb. So, it wanted to get tested. That being said, this is what you also have happening. Now, that's on the shorter-term basis. The longer-term basis is saying that King dollar doesn't have to actually stop until 95. Let me show you how this shakes out. If we put the continuous contract up inside King dollar, what you're going to see is that when we did, let's go back to January of 2017. January 2017, that was the last high of King dollar. It was traded at 103. It goes straight down from January through September of 2017, we hit $90. 103 to 90. Then we did a counter-trend bounce. The counter-trend bounce got you up to 95. So you can see what's happening here. Right now, on the continuous contract, we hit 93.515. Bottom line, this doesn't have to stop to 95. So we'll see how this shakes out. Bottom line, out here today, yeah, you're going to get a failure on price, and we'll see if that's the turn. And if King dollar keeps showing strength, what you're going to have here is that this thing will make that run up to visit their neighbors from the $95 level. Some of the Dow stocks out here, what we're looking at is that you have the, come on, baby. Okay, so we get Exxon up 14 cents. Disney's up $1.87. Let's go over to Disney for a second. So we take a look at Disney. The high for the year is $113. The low is 96. And Disney out here today, bottom line, you're finally getting into the downdraft that had been created out here on February 5th and February 6th. Not much juice behind the move, and we'll see whether price is actually going to be able to hold out here. I guess what the news is that, let's see. Well, they're still trying to put it together the Fox deal with Disney. Not quite sure whether the bid underneath Disney today might have to do with ESPN. Bottom line, ESPN's been really weak inside Disney. That being said, bottom line is that with that new gambling for the states, that's going to make a difference, I suspect, because even Tommy was talking about this morning, that you'll end up going to an ESPN app on your phone. You get the scores. Well, guess what? In many states, there's going to be gambling on games in a big way, and that very well could put some real firepower under ESPN once again. So it's going to be wild watching that baby shake out. Let's go over and take a look at that gold contract. So gold out here is in a confirmed ABC structure on the way down. Bottom line, you broke out that B point yesterday, did it with some real juice, and we got down to 1285.70 today. Thus far, you're trading at 1291, which is a good indication. We'll see what kind of a bounce we're going to get out of here. If we take a look at the actual continuous contract, now this is where this gets pretty cool inside the gold market. If I put this continuous contract up, what you're going to see is that, and we make a trend line from the lows from the low that was established in December of 2015. What you're going to see here is that we just come back to that trend line. That trend line being set up at 1285. Oh, that's crazy. No, 1281. 1281.57. That's where the trend line is set up. Now, what you don't want to see, if you happen to be a bull in the gold market, is you don't want to see this thing get broken with conviction. The reason being that if you're watching Tiger TV, I have that trend line up. Because if you do get broken by conviction, it can set up quite a spill inside the gold market. The test is being out here now. If you're a bear, guess what? Yeah, you want that thing broken, and you want it broken with conviction. So we'll see where this shakes out. What is happening right now, it's Wednesday. Bottom line is that this is going to get dangerous coming into Friday. That's how this seems to be setting up right now. If we get a rejection of lower price, then we get a whole different ball game. Let me go over. I'm going to go over to the GLD and see how this is set up, because what will end up happening is that on the GLD, we are also going to get the volume characteristic, which is really important of how this whole setup goes. Okay, so it sets up almost the same. Let's take a look at this. Yeah, it does set up the same. Okay, so this is cool. So the GLD, yeah. Okay, so now we're coming into a monthly. You're coming into a monthly 145 million and 159 million, and we've done 67 million. Okay, so the volume's not bad coming in here. I'm going to change this to a weekly and see if I can get the same setup going. Yeah, good. Okay. As soon as we come back, folks, we'll take a look at this on a weekly basis, and we get the volumes right next to it. Dow Industrials right now are up 43. Nasdaq's up 48. S&Ps are up 12. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And as we go over to the GLD, we take a look at the GLD. So this is what we have. I have this on a 4-year weekly basis. And the reason I'm doing it like that is that we can get a clearer understanding of how we are coming into that trend line on a weekly basis. So what we're doing is that this trend line here that I have is starting December of 2015. I didn't do the very end because it doesn't line up as well, but I have basically 3 touches inside the chart. The first one, December 2016. So what you have is this. We've come down this week. Thus far, you've come down with 18.5 million shares. And let's see. So GLD. The GLD does, well, it did 10 million shares yesterday. A big number, yeah, no doubt. 3.8 today, so you're only going to do about 4.5 today. That being said, thus far in the week, so let's add, I don't know, throw another, we'll throw another 10 million in at least. So that'd be 28 million, and you're coming into 37. Now that's a decent indication. Number one, that even if you do break this thing, you're not breaking this thing with volume. When you go into trend lines, what you want to see is that the conviction deal is wide price spread, accelerated volume. So what we have here is that we certainly come right into the trend line with wide price spread. We've gone from 125 to 122 just this week alone. So bottom line is that we'll see where this shakes out, because if we do break this, then what you have on the table is that, let's put this up this way. So what you'd have on the table is that your next leg is December, right there. Yeah, December. That'd set up, yeah, and see, that's where that ABC structure is. It's about 12, I'll get the exact number. But that would set up, if we did break this thing, that'd set up like a 1250 in the gold market. So we'll see where this shakes out. Let's do the SLV. We'll do the same thing, see what this SLV is looking like. So the SLV, which is the iShares silver, so silver market, what you have is this. We take this, we put this on a 3-year also. Yeah, different chart, which is pretty cool, actually. So this is still just in a consolidation, and you've actually pulled back with dramatically lighter volume. The silver, the SLV is going to be pretty hard to break down, because what you do have between the 15 well, between the 1550 mark and the 14 mark, you get some monster volume on a weekly. You get 42 million, 41 million. We only did 34 million last week, and what we have this week is that you have 24 million. If we go take a look at the nugget for one of the tigers out here, first I want to look at the GDX because that's going to be the positive part of it. Inside the GDX, what we have is this. That's even when we came down yesterday, what's impressive about the GDX is that we came down yesterday, had big volume, 60 million shares. Well, the 60 million was going into 31, but yet you didn't make it down to the 31 price point. If I put this on a weekly, okay, so if you put it on a weekly, you're at 22.25. You've got to 22.12. It's really not saying much. Let me go pull up the nugget. So the nugget, folks, is the direction 300% bull position inside the market, and that would be for the equities. I wouldn't be buying this right here. You know, what I'd let this baby do, what I'd like to see this do is test the low of yesterday again. We did 7.5 million. It was going into 4.4. Never made the bottom, which is 24.36. We made 24.39. You know, it's a real toss-up too, by the way. But knowing the gold market and what can happen on a Friday coming into it, yeah, I wouldn't bite just yet. If we go take a look at some of the individual equities, well, actually, let's go look at the two biggest weighting structures, which are Newmont and Barrick. So if we go to Newmont, $39.64. That's a decent setup. We did come down with volume, but we never broke any of the swing points. That's saying that it wants to stay in the consolidation. The top of that consolidation is 42. You're at 39. ABX. Let's go take a look at Barrick Gold. That's interesting, man. They're both in good shape, man. Barrick back down yesterday, no doubt. You know, you had volume of 8 million, but man, you were going into 15 million at rejected lower price. These want higher price. In fact, Barrick's an ABC up. It's a big one too. The 8 point is 11. The B's 13.5, 13.3 rather, which it's 2.5. So you're talking 15. Yeah, you're talking wants to go to the high. This is pretty impressive. That's a decent indication that we are still going higher inside the equity market, in the metal market rather. Let's go take a look at two of the stronger silver stocks. So Pan American Silver, that come out with numbers on the 10th. Blasted topside, had volume, had everything. Bottom line, right now you're trading 17.75. If we go take a look at First Domestic AG, that also went topside. Oh, this is nice. This is strong. This is strong. This is also an ABC up. Let me see if did they already come out with numbers too? Yeah, they already come out with numbers. Let me put this on a weekly. Okay, so yeah, this is impressive. Okay, so you're going into a swing point. You're gonna need a little more juice. You're going into it with 14 million versus 18 million for the week. But that being said, when this thing got blasted down in August of 2017, we went from a price point of $6.40 to $8.40 to $6.20. You're already trading up at 7.17, so yeah, that brings your probability up that it's going to make its way up to this $8 mark. And you know, if that's what we get, you're going to basically very well could see a lot higher price. Yeah. We go take a look at Royal Gold. Royal had been going for its highs. Still pretty good. You know, Royal bottom line $88.24. I think this high is $100. Yeah, it's $100, $100.84. Royal's basically pushing these levels and pushing them with some juice behind them. Let's go take a look at a few of the, let me see, PHDC. We'll see if any of the bigger funds are buying into Royal. All of these 13Fs, bottom line, have to be out by today. So you had, well, Capital Group, that's American funds. They own 12.4%, and they're still buying. They bought 1.3 million shares. You had T. Rowe Price buy 148,000. Mass Mutual, now this is going to be good with Mass Mutual. The reason being is that when you see Mass Mutual, most of the time you're going to see Fidelity and State Street right behind them. I don't see them yet on this one. You have Mass Mutual in here with 138,000 shares. That's a, it's almost a, yeah, they almost doubled up their position. Bank of Montreal, they upped their position by 75%. Goldman Sachs came in. Let's see who got out. Yeah, small people, not a lot of sales. Yeah, pretty good. Stay right there, folks. Come right back. We have the Dow Industrials right now trading up 54. Nasdaq's up 50. S&P's are up 13. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at that oil market. So we had the oil numbers come out this morning, folks. Bottom line is that oil just refuses to back off. Had a high out here today of $71.56, a low of $70.66, and yeah, it's laying right at the highs. Bottom line is that we've been up here 6 days right now. $75 is not that far off. Unleaded gas, and of course, you know, there's one thing with the barrel of oil. We don't use barrels of oil, but guess what? We're all using gas. And if we take a look at this gasoline, once we were talking about this $2.18. Once you launch $2.18, you can see what happened today, folks. It's not good. $2.24. Big move out here today inside the unleaded gas market. That you have it up almost 2%. And if we take a look at this, what you're going to see, and this is what's really, this is going to be coming out of our pockets very quickly, is that the 218 was important because that was where we had bounced when we first bounced from January of 2015 up until June of 2015. Once you launch that number, which is 218.58, which are 224, it puts game on, first off to the 255 level. And the 255 level, folks, would be the lows that were established from February of 2011 over to November of 2013. That being said, you know, that's gonna get some resistance. But your swing point, you swing high, then it can go after 315. So that is going to be, bottom line, some big numbers we are going to be pushing out inside the gas market that we haven't seen for quite some time. And if we go over and you take a look at, you know, one of the distributors out here, you're going to see it's kind of right in this stock. Valero Energy, the low for the year in Valero, $60, the high 116. When you bring this back, and I'm curious as to see what kind of expansion of revenue they get on these numbers. Yeah, so it's interesting. It's not so much the expansion of revenue. Yeah, you want to see something interesting? This is. Yeah, no, it is. It's not the expansion of revenue. It's the expansion of what they can bring to their bottom line. So watch this. This is intriguing. In 2014, they took in $130 billion. Yet they only brought $6.66 to their bottom line. That's a good number. That was the highs, okay, 2014. And this year, well, let's say 2017. 2017, they took in $94 billion, and they had brought $4.96 to the bottom line. Now watch what happens this year. And this is where it's pretty dramatic, actually. They have just gone from 2017 making $4.96 to their bottom line up to $7.14. And that's where, when Andy talks about these crack spreads, that's how this shakes out. So that's pretty incredible. And in that context, so why this is the point, the bigger point, I'd say. They are making $7.14 to their bottom line. They're taking in $28 billion less than 2014, and yet in 2014 they made $668. So they're taking more money into the bottom line. They're taking in over 30 billion less. You know, so you can see when these crack spreads actually move in the context of where the amount of oil that costs a refiner versus what he can push it out the other side, and that's right where they have been for the last year. They're right in that sweet spot. It's going to be intriguing watching how this plays out from this point on, because of course when the price of oil gets that much higher, bottom line is that the spreads start to, they'll widen out until you and I at the pump, we start pulling back and don't start pushing out or spending as much. Not spending as much. We'll spend more money, but we'll drive less. And that's all about the driving. Now, what they have going on right now for them, no doubt, is that we are coming into driving season. If we go into the XLE, that's in a confirmed ABC structure on the way up, still making its way. Wants up this $78.39. Right now, we hit the $77.59 today. So energy still looks to want higher. Let's go to Exxon. Exxon's Exxon is still the weakest stock, but guess what? That wants higher price too. Chevron's got some juice behind it. Yeah, Chevron's gonna. I wouldn't doubt if Chevron's actually gonna launch the swing point. 133 is the swing, but the way Chevron is trading here, let me look at this. Chevron actually looks like it can launch the swing point. So. Well, we'll see. That's an all-time high, actually, 135. And I believe both of those. Yeah, so both of those already came out with the numbers. Let's go into the good old Goldman. So we know that on the monthly basis, Goldman failed on price and volume last month. This sets up much lower prices inside Goldman. You know, thus far, you've got from a price point of 275 to 241. And if we take a look at this, yeah, this is still saying Goldman's next move down is going to be somewhere about the lowest swing point gets you 205. We go take a look at Berkshire Hathaway. Oh, and I'll show you something with Apple. This is pretty amazing with Apple. BRK. So Berkshire, oops, that's trading 197. Yeah, that can't get out of its way either. So these 13F filings, Apple, there was so much institutional selling in Apple. It's pretty amazing, folks. And when you take a look at this, there's no doubt, you know, Apple's at an all-time high right now, but when you, it's hard to really actually comprehend how it's at an all-time high when you see how much selling was actually done. What does happen with a 13F, though, is that this 13F that you'll hear a lot about, you know, today, tomorrow, the next day, because the filings, total filings are all due as of last night, is that that's the end of March filing. So you don't know where they have gone from that date. But when you pull up Apple, what you're going to see is you're going to see some monster numbers. T. Rowe Price moved out 35 million shares. They only got 36 million left. Capital Group, that's American funds, they moved out 25 million shares. They get 24 million left. Fidelity moved out 21 million. They had 100 million left. State Street moved out 11. They get 197 million left. Wellington moved out 9. They get 20 left. And you know, when I bring these up, these are the numbers. See, these right here, it's pretty cool actually. Fidelity, State Street, Wellington, and Mass Mutual. Mass Mutual is not on these top ones. These guys they always follow each other. Nothing is always, but bottom line, you'll see these guys go in and out of equities. Once one's in, bottom line, the other ones are going in. And I've been following this one for years. And the danger is when they start getting out. You know, Fidelity is a monster themselves, but all those three, and then Mass Mutual on top of it, and they're in different places in Boston now. When I was at McKinley Square, bottom line, they were all within a block of me. Stay right there, folks. We're coming right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow right now up 51, Nasdaq up 44, S&P's up 12. Macy's came out with their numbers this morning. Bottom line, folks, there's life after death in Macy's. It's up 10%. You got an ABC structure on the way up. It's taking a B point out. It's got good juice underneath it, too. Let me look at this for a second. So it's going to be more like your weekly ABC up, too. Yeah, so you're dealing with, let's see. Well, it's going to be close. Well, no, it should do it on a weekly basis. So this is going to be intriguing. So you got 22.5. Yeah, you got a 10-point. That would get you $38, and the swing high up there is 42. You're at 33 right now. So let's see what Macy's actually had to say out here. Boy, there's lots of news on Macy's. Okay, so. And this was the big one, I'd say. The earnings per share, so they were, there it is. So the estimate was 37 cents. They made 42. Their license comps, now this is where this is going to go. I wonder what license comps means. The estimate was +1. They did plus 4.2. Oh, I see what's going on. Plus license comps. Owned plus license comps. I'm not sure what that means. Bottom line is that revenue, let's go look at the revenue structure here. So revenue out here, okay, they did 5.5 billion. It's still, this is still down from bottom line 2014. 2014 they were averaging 6.4 billion a quarter. Now they're at 5.5 billion. We'll see how this shakes out, but what you do have, you have a confirmed ABC structure on the way up. Put this on a monthly and see what we got. You know, a monthly basis, what they've done is they've gone from 73, hit a low out here of 17. You're at 33 today. This is game to 45. Let's go to Rich in Oregon. Hey, Rich, what's going on? Okay, he wanted to look at McEwen Mining. I believe he wanted to look at McEwen. Let me see, M-U-R, in case it's, oh, maybe it's Murphy Oil. Maybe it might have been Murphy Oil he wanted to look at. So let's go take a look at this. You have Murphy Oil, the low for the year is 22, the high's 35. You're trading 31.14. Well, if you could bust into this with volume, you know, you might have an ABC up. It's not pushing this way. If you were looking for Murphy Oil, it was pushing it to 31.31. It's going to need more volume, but you know the setup's not bad. Particularly the setup's not bad because we know that inside the XLE that is doing a confirmed ABC structure on the way up. Murphy Oil is going to be, let's see, they're pushing out, let me see exactly what they do, what part of it. Okay, so it's wholesale oil and gas exploration, refining, marketing, You know, now watch what the difference is. The difference is that that's a wholesale gas exploration versus all as Valero does, I believe, is refine. Yeah, that's all it does, and that's why it's making so much bread. That's totally refining. What ends up happening in Valero, of course, is that they're just making the spread. That's it. They don't have the bills on the exploration. They don't have the risk on the exploration. Whole different ball game when you do look at that. Amazon. We'll take a look at Amazon. Amazon is the news out here today is that their Whole Foods deal. They are putting some firepower under Whole Foods. The way they're doing that is that they're basically giving their Prime members quite a few discounts, big discounts. What's going to be really wild is that I'm wondering, I can't wait to actually go in one. The way news is set up is that Amazon ramps up perks for its Prime members at Whole Foods. It's given its Whole Foods, it's given its Prime members more reason to shop at Amazon. So I'm wondering, like, if today what's going on, one of the big parts of this is that they're selling wild-caught halibut at $10 off per pound. Well, Tommy and I, we went to their site this morning, taking a look at it. They really, I guess they could have said half price because they're selling wild-caught halibut at $9.99 a pound. Now, what is going to be intriguing after reading this article is that, okay, if you're not a Prime member, are you paying $20? And of course, what will end up happening ASAP is that I could see folks basically turning around, signing up pretty quickly because you only have to buy a few pounds of halibut in the course of you know, whenever you're shopping out here, and then how many more members are they going to get because of the amount of breaks that they plan on giving their Prime members inside Whole Foods. But it's like there's going to be two separate price points. That's what it seems to be. What it's saying here is customers who pay the annual fee for benefits such as free 2-day delivery, access to Amazon's video, all of the above, will now also get discounts at the upscale organic supermarket that Amazon bought last year. So I'm wondering if on the way out, more than likely on the way out, oh, I know what's going on. What they're saying, let's see. Prime members will get an additional 10% off hundreds of products, Amazon said in the statement. Even deeper discounts on unique merchandise. The Whole Foods offering will expand the universe of Prime benefits. I wonder if they're going to do this on an app. Yeah, we'll see how I suspect the next thing inside Whole Foods is that you'll be walking around Whole Foods, you have the app, you do your checkout. I know that Amazon started, they have a test store right in their office, right in their headquarters, rather, downstairs. And I know they were starting to bring that out into different communities. We go over to Google. Google out here today still having a hard time getting through the February 5th level. Google's off that high of 1186. And I suspect what we're going to see is this. We're going to see Amazon's going on Google's turf. And what's intriguing about that is that it's not like Google can go on Amazon's turf, you know, but because Amazon has got so big, they have so many products, they have so many customers, you can see how Amazon can definitely get on Google's turf, where Google is not going to basically start selling everything and delivering everything. So this is going to be intriguing watching how this thing shakes out. We go over to Facebook. We take a look at Facebook. Facebook is trading 182.90. If we do take a look at a few of these 13 F filings inside Facebook and see who's scattered on the way down, what you have, let's see. So, nothing heavy really. You know, you get big companies selling big $3 million at a pop, but on the buy side you have a lot bigger. Capital Group came in with buy a 14 million, T. Rowe Price 10, Viking 5, Shaquana 5. When you take a look at this quickly, it looks to me like on that downdraft, you know, actually it's about a 50-50. What you did have is this. You had a lot of funds selling 2 or 3 million shares, 1.5 million shares. But then on the buy side, you had like the top 3 make up for all the ones that were sold, really. We get 14 million, 10 million, 10 million, 5 million, 5 million. So big numbers. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, don't forget, tonight, 5 o'clock, we got something great for you. I'm Mr. Dave White. He's going to be doing a workshop. That workshop, folks, is all about option trading, and it's all about option trading near expiration. We have monthly expiration this Friday. You can come over to our website. You can take a look at Dave's 2 newsletters. You subscribe to either one of them, 30-day money-back guarantee. You come into the workshop, and with bottom line, option trading the expiration, analyzing swing trades, expiration day scenarios. Dave's been setting up some nice option trades. Check it out on the front page of TFNN. You're going to love the workshop, and if you can't make it tonight, folks, you can still come over. You can get it. It'll be on your page for 30 days. You can go over it as many times as you like. We take a look at the volume as we're coming into the closeout here. What you're going to see right now, we're at 500 million on the NYSE. That'll throw about 750 in. On the NASDAQ composite, we're at 1.8. That'll probably do about 2. The composite, the volume on the composite's shrinking pretty dramatically, actually. If we go to the NDX 100, we take a look at the NDX, you're going to see this is pretty cool. Yesterday, you come down with 49 million. You're going up today with 20. It's going to have a tough time getting into these highs. We take a look at the SPY. I think it's the same type of setup into the SPY. Yeah, it is. You know, yesterday you go south with 87 million. You're up with 40 today. And the SPY is still actually going into the February downdraft, the February 5th to February 9th downdraft. That was vicious. Well, actually, the day of February 5th was vicious. That's when the SPY went from a 275 to 265. Big number. And we're still coming right into that area. And it's going to take a lot more building cars, a lot more volume, a lot more demand to make it through that supply line. The supply line on the S&P is pretty extensive. No two ways about that. We go take a look out here, market-wise in general, and it looks like this market wants to basically flatten out coming into the close. You know, your Dow's up 36, Nasdaq's up 38, S&Ps are up 10. The S&Ps have already given up 10 points since I've been on the air. Bottom line is that market's having a hard time holding price. Stay right there, folks. Lots of numbers coming out after the close, as well as our man, Mr. Dave White, 5 o'clock. Check it out on the front page of TFNN. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Tim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 62, Nasdaq up 46, S&P's up 13. Gold contract flat, $12.90 an ounce. We had silver up 11 cents, trading at $16.38. If we go over to that silver market, we take a look at silver. What you're going to see, silver has stayed inside its higher range, got out of it yesterday, got out of it today, got popped right back in it both days, actually. Particularly yesterday is a big number. So we're at the 1638. You did 61,000 contracts out here inside the silver market. Bottom line is that, you got below the low of yesterday. The silver market never made it down to its lowest swing point, which is $16.07. So that's basically a decent indication that silver's going to try a higher price. That being said, gold, different ballgame still. Gold did break swing points, broken with volume. What you had out here today, you did get to a lower low, and we did have lighter volume, so we'll see if, in fact, this gold market can bounce. And the correlation, yesterday we came down 485,000 contracts. That's a monster number. Today you did 319. You got down to 1285. You closed inside the low of yesterday. That says you're going to get a bounce. And if we go over to the King Dollar and we look at King Dollar, bottom line is that King Dollar Did make it up to that December 12th level where it's been trying to go forever. Made it today, and then gave it up in price. So we'll see whether the King Dollar is going to back down from this area. We did 27,000 contracts, which is not bad contract volume for King Dollar. You know, yesterday we also did 29,000. Bottom line is that we'll see how we come off of this number. The notes and bonds, same type of setup, meaning that notes and bonds did confirmed ABC structures down yesterday. 10-year note, that continued lower today. The low yesterday was 118.16. We hit 118.15 today. You know, didn't get destroyed, but bottom line is these are ABC structures on the way down. We take a look at the 30-year. 30-year right now is set up. We closed down 5 ticks. The low of yesterday, 140.27. We're at 140. We hit 140.27 today. We did 298,000 contracts out here. Yesterday, you did have monster volume. We did 430,000 contracts, but they both want a lower price. The 30-year would have to get back inside the 141.5, 141.14 in order to basically reject this lower price. So you're going to see, bottom line, these yields, they have popped, and we'll see how much further they want to pop. Cisco just come out with numbers. Let's take a look at Cisco. This is the manufacturer, you know, the Internet Protocol manufacturer. This closed at $45. Right now, you are trading at $43.53. We take a look at this. Let's see, $43.53. Yeah, so this had quite a run. You know, we go back 2011, you're at $11. So let's see what they have to say. Okay, so numbers go like this. Estimate was 65 cents. They made 66. Revenue estimate was 12.44 billion. They made 12.5 billion. So that part of it worked. That's their third quarter. What is happening is that their guidance on the fourth quarter, what they're saying, earnings per share, is going to basically miss their midpoint. So that's what's going on inside Cisco. Let's go back to the equity for a second. So we pull this up. Let's see where we are on a much longer basis. Yeah, so on a much longer basis, you know, this is pretty amazing. You know, Cisco, if you're around the 90s, Cisco had reached a price point of 82. It was 1997, it was a $5 stock. 2000, it was an $80 stock. Crashed down to $8, and once it basically, it's, you know, this is churning its way up. Right now, it's hitting the lows of the highs, which is going to be really intriguing. That's that whole. Let's see. Yeah, it's the $50 area, so that's where it's going to have a hard time. The supply line up there is pretty incredible, meaning the amount of shares that were traded in between that whole area. But the good news for it over the course of time, bottom line, it's got up into higher prices, and we'll see how much more it wants to go topside. Some of the higher volume stocks out here today in the marketplace, you had Advanced Micro up 37 cents. Micro Technology was up 2.49. Macy's caught a bid also. That was up 3.24. You had Apple up $1.74. Freeport-McMoRan was up 68 cents. Let's go to Freeport-McMoRan and see what's happening there. That thing was getting smoked. They have some political problems in Indonesia. Caught a little bid. You know, Freeport-McMoRan had come down hard in April. It went from $19.68 to $14, and this has to do with one of the largest mines in Indonesia. And the real question is going to be is that are they going to be able to basically still keep the same type of deal? Resolution of Indonesian environment claim opened. Let's see, parties motivated to reach an accord. This is Freeport-McMoRan this morning coming out. It looks like the Indonesian Supreme Court ruled its tax position justified. Right? We'll see where that shakes out. Bottom line is that metals market, folks, you know, what you have inside the metals market at all times, you have the risk, number one, that you get the rock. First, of course, rock is always inside, metals inside the rock. You get the rock. The question is, how much metal can you get out of the rock? Then, bottom line, can you get out of the country, the political situation inside countries? That is always, not always, but in many jurisdictions, that's a big deal. If you remember, even when gold was at its highs, the politicians in the U.S. all of a sudden wanted to start taxing the heck out of the companies, our own companies, right in Nevada. Greed is a beautiful thing, folks. Now, greed isn't a beautiful thing, but bottom line is that the politicians just love that. Jack in the Box. Jack in the Box closed at $91. This right now is trading out at $88. Stay right there, folks. Going to be coming back with our man, Mr. Dave White. We're going to be talking about what he's going to be talking about in 45 minutes. Stay right there.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow finished up 62, NASDAQ up 46, S&P's up 13, and coming up at 5 o'clock, folks, 45 minutes, our man, Mr. Dave White's going to be doing a workshop for you. Bottom line, you can come over to our website at TFNN. You're going to see it right at the top of the carousel. Sign up for either one of his newsletters, the Path of Least Resistance, the Tech Insider. They both come with a 30-day money-back guarantee. You can come into this workshop, and what Dave's going to be talking about is option trading near expiration. Let's go to our man, Mr. Dave White. What's going on, brother?
Well, watching a few of these reports come in, like Cisco. Of course, then we've got Walmart in the morning and AMAT after tomorrow night.
Yeah.
After the close. So we got 3. The charts don't look all that good, and I went through them on the show today, but a lot of these have come up on very light volume off their recent lows. So not real surprising that these things are kind of weak. But we'll see what happens tomorrow. But we're set up with one option position right now. So we'll look at a couple more tonight and see if there's anything going on. But you know, we had kind of our fireworks a little earlier than the last couple of days this week.
Oh, yeah. You had a beautiful trade in Red Hat. That was pretty intense. Right.
So we took our money a bit early there. But it certainly is one of these things where you kind of have to take your money when it's there.
Oh, no doubt. So in the workshop, Dave, let's give them a little, you know, my understanding is that there's a difference in what, the monthly options versus the weekly options?
There is in the way that they decay, because they have, a lot of them have 60 or 90 days.
Sure.
The weeklies tend to be a lot more expensive when you see those out, and you can't really do the same thing with them because they're pretty much expensive until Thursday night.
Okay.
So you have one day, and generally that's after about 2 o'clock on Friday afternoon, so you've got about 2 hours. It just is very tough.
Nice, okay.
These, I mean, I got options on a plus $100 stock for 50 cents on Tuesday.
Right.
So, you know, if you do it right, options are the best way to reduce risk, not take more on. The biggest problem people have is because they're cheap, they think they can just, you know, load the boat. And the idea is to be right about half the time, but on the time you win, make 300, 400, 500% when you are right.
Right.
And just take the 100% loss when you're wrong. And that is probably the hardest thing people, it's kind of like a home run hitter. He's going to strike out a lot, but he's also going to make about 10 million more than everybody else on his team each year.
Yes.
So you have to be able to walk away and know that you strike out a few times. And that is probably the biggest lesson to learn, is that just because they're cheap doesn't mean you can take more risk on. It's actually, if you do it right, and we're going to talk about a couple of the big indicators of getting the price right on buying options, and when you have a chance. There's a couple of figures out there that I found that when those numbers are below a certain level, options are cheaper than actually owning the stocks, and without the ability, with a fixed loss, right?
Exactly.
You know exactly how much.
Defined risk is a huge deal.
Right. And if I lost 50 cents on $100 stock tomorrow, I wouldn't blink an eye if that was my stop. And that's kind of the idea. You've got the ability to hold something, even though it may be going against you, because you're only risking a tiny amount to make maybe 4 or 5 times that back. And that's, you know, normally what I'll do is buy stocks that are real cheap, like $5 or $10.
Yes.
But if I want to play a big stock, and the conditions that I talk about are right, they can be that cheap, and you can make that kind of money on them. So a lot about when things are cheap and kind of rules of thumb, so you don't have to do a lot of math. We'll show how options and what the different patterns in options expiration are. There's basically 4 of them.
Okay.
So we'll go through those and what they tell you about what's going on in the stock. A lot of times I can just go through them and go, no, 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 no. There's yes. Now I've got one that looks interesting. What do I do? What are the numbers got to be like? How short is it?
So that's pretty cool.
Demand.
So, I mean, as you're going through that, people are actually going to be able to do this themselves as long as they go through this a few times, right?
Right. There shouldn't be anything that they couldn't do. I've written a lot of software to make it automated and draw nice charts.
Yes.
And do that, because I've been doing this since, well, 2003.
Oh, long time. I know.
My first big article in Stocks and Commodities was about this in Christmas of 2004. So
that's
this
crazy,
has been a thing. You called it white lightning back then.
Yeah. Right.
And if you've got it right, it is a license to get money. It only happens maybe 4 or 6 times a year.
Right.
That those conditions are right. So we're going to talk about what makes them. We planned this a while ago because I was pretty sure I saw the conditions coming up for this expiration being right. We've had some very good trades out of basically the same techniques, even in the Tech Insider, where we didn't use options. It was basically the same technique that if we were using options that you would use.
Yeah. Well, it's so intriguing about this market right now. I mean, we're still at highs, but it seems that, you know, it shakes around quite a bit. I mean, you know, it wouldn't be too surprising you wake up one day whether, you know, you're up or down a couple $100. I mean, you know, it's been having a tough time getting up to those January highs, but, you know, between the interest rate structure and the dollar, it's like, okay, man, you know, is that what's running these markets today? So, you know, coming into option expiration, we're going to find out, I think, right?
Well, yeah, and of course, I've added one big new trick to my trick bag of things with last December getting into my sector oscillators.
Yes.
And those have really helped me figuring out where I want to be in what sector in any of these going forward and when there's blood in the streets. So we've done fairly well, kind of like we bought NVIDIA calls back when it was like, well, 211 or something, or 212.
Yes.
That day it went down into those and had a nice big pop on that. But we pretty much knew that that sector was probably hitting a bottom, that sector now hitting a top. So you can kind of see when you want to be inputs and in calls and where, you know, you're probably going to have a turn in the next couple of days. So it actually leads, so it gives you a little warning. There aren't many indicators that tell you ahead of time things. So I've really enjoyed developing that and the help that Basil has put in on that. I send him the charts every day and we talk a little bit. So he's helped me a great deal. I want to thank him on it.
That's awesome.
But those are in the daily newsletter each day, along with some other new stuff I've been working on to expand the newsletter. So if you haven't tried it in the last 6 months, it's like a whole different newsletter.
That's right. All you have to do, folks, come in the workshop. You have nothing to risk. 30-day money back guaranteed, either one of them. Come over to our website at TFNN. You're going to see it right on the front page. When we talk about the carousel, you can't miss it. As soon as you get over here, you're going to see it right at the very top of the page. You got Dave White, Options Webinar, 45 minutes, folks. It's going to be a great webinar. You're going to learn a lot, be able to do it yourself. Dave, have a great one, a safe one. Of course, I look forward to the webinar in 30 minutes.
You bet.
Cooking, man. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to Jack in the Box. Jack in the Box just come out with numbers here. So let's see what they're saying. They closed at $91.36. Let's see. So I want a different one. Easier one to read. Let's see. Okay, so estimate earnings per share. The estimate was 86 cents. They made 80, so they missed the earnings per share estimate. Sales per store, actually comp sales went down. They were expecting a 0.1% up. They got a 0.1% down. They're buying back another 200 million shares. So let's see where this shakes out right now. So Jack in the Box closed at 91. The high for the year is 113. The low is 79. It's trading 87. So this has been quite a consolidation. This has been the same consolidation since 2015. Yeah, this very well could be a big ABC down. You know, this first leg, you got a high volume low at 79. You're at 91. It's going to gap down, well, $4. That's not the end of the world. But bottom line is that we'll see where that shakes out. MCD, I want to go over to McDonald's and just see the difference in this chart. So McDonald's, the low's 145, the high's 178. Pull this back. Yeah, McDonald's is still at high, man. They're still cranking it out. This is pretty wild when you look at McDonald's. So let's see, gross-wise, what McDonald's is taking in. They get all these new ads on saying that now they're doing fresh beef, right? Look at that, though. That's quite a contraction. Now, this is intriguing. McDonald's is contracting on gross volume, but yet their earnings per share number has gone up pretty dramatically. So in 2014, they took in $27.4 billion. 2018, $6 billion less, but yet in 2014, they made $4.82 to their bottom line. 2018, they're making $7.66 to their bottom line. That's pretty wild. And when you look at all the international markets, they're all contracting. The U.S. is contracting by 2.5% over a 3-year period. International markets are contracting by 4.5% over a 3-year period. They have the high growth markets. They're contracting by 7% over a a 3-year period. So bottom line is that it's going to take more than that. let's say we got TTWO. Let's see what they're having to say. This is Take-Two Interactive. This is a game publisher, I believe. Yeah, so this closed at $113. The low for the year is 65. The high is 129. This is trading 107, so this is getting smacked pretty good. Let's see what they have to say. Okay, so earnings per share. Okay, fourth quarter, the estimate was 63 cents. They made 71. The revenue estimate was 443. They made 411. Yeah, see, the market's never going to believe that. So, yeah, check that out, folks. So, what they claim is that they're claiming that they took in 31 million less in revenue, but yet made almost. Well, no, they said they're claiming they made 8 cents more than their estimate was, which would be bottom line 15% more. That's the fourth quarter. The first quarter, what they see is that they're looking. Their estimate had been. Oh, look at this one. This is pretty intense. The revenue estimate for the first quarter, which is the quarter they're in now, was 356 million. Now they think they're only going to do from 215 million to 265. The earnings per share number was 43 cents they thought they were going to make. Now they're going to lose 5 cents. So there's something intense in here that is not great. I'm surprised that they're only actually shaking this down. 113 it closed at. 106, that's not the end of the world for when you take a look at those numbers, actually. Put this back. It's 106. Yeah, still not the end of the world. Bottom line, you have a consolidation that's in place here. But that baby, that's quite a miss for the aspect of how this thing basically is trading out. Some of the higher volume equities, actually, let's go over and take a look at Facebook. So Facebook out here, we had the 13F filings, and what you did have in Facebook is that you had a huge amount of buyers versus sellers, folks, which is pretty wild because the 13F filings, the quarter that we're talking about is the quarter that just ended March 31st. And Facebook low was on March 26th. And what you'll see, which is pretty wild, is that the number of buyers was dramatic compared to the number of sellers. Now, you had a larger number of sellers. That being said, the number of sellers were only selling 1.2, 1.3, 1.5 million shares. Where the buyers came in, my God, you know, first, American funds came in and bought an additional 14 million. T. Rowe Price, 10 million. Viking Global, 5 million. Fundsmith, 5 million. Norges Bank, 4. 5. Then it goes 3, 3, 3, 3, 3, 2, 2, 2. The whole first page is filled with huge buys. You take a look at the sells, and you get a couple of big sells at the top: 4 million, 3 million, 3 million, 3 million. Then it's down to 2 million and 1 million. It's pretty dramatic. Now, just the opposite of that. So that would be, like, first take a look at those 13F filings. That would be saying that, you know, the bigger funds came in, hand over fist on that downdraft in Facebook and bought. You get back over to Apple, and now Apple's at all-time highs. When you do bring Apple up, though, and take a look at it, it's really hard to comprehend how is it at all-time highs. The reason I'm saying that is that when you take a look at the sells that came in, they're dramatic. Big numbers. T. Rowe Price sold half their position, 35 million. You had Capital Group, which American funds, they sold half of their position. Fidelity sold 20% of their position, another 20 million they sold. Wellington sold 11 million. State Street sold, where's State Street? State Street sold 11 million. Wellington sold 9 million. You have some monster numbers here inside Apple. The buyer, the biggest buyer out there was good old Warren Buffett. Let's see how much he owns right now of Apple. But guess what? One fund is not going to keep that baby up. Right now, he just got over the 5% mark. So he owns 246 million shares of Apple. That is one big number, no doubt about it. Let's go to Amazon and take a look at see how Amazon is shaking out here. So the 13F inside Amazon, buyers versus sellers. So buyers, you got a lot of people that were buying up 600,000 shares, 600, 600, 5, 5, 3. Sellers, oh, you get some sellers in here too. Capital Group sold 6 million, T. Rowe Price 1 million. So it looks like Capital Group and T. Rowe Price, as well as State Street, have been moving out of these FANG stocks. Come right back, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. If you want to see a number, this is pretty intriguing, actually. Not that the S&P is really up a lot this year. So if I bring this back to, let's see. Okay, so we started the year off in the S&P at 2673, approximately 2673. You're at 2722. Listen to this number, though. This is pretty incredible. So inside the S&P 500, I was just going through these FANG stocks. Well, I'm going to end up, but we'll do Netflix also and Google, because the S&P themselves, one of the analysts that work for S&P just come out with this number, that 1% of the companies inside the S&P are responsible for 64% of its total gain through this Monday. Pretty amazing. And here, these are the stocks: Facebook, Apple, Amazon, Netflix, and Google. So you get 5 stocks. What's intriguing here is that, you know, we've always been used to that inside the NDX 100, those correlations. S&Ps, not as much. That's a big number. So now let's go over to Netflix. We had NFLX. What we hadn't done is take a look at those 13 F filings in Netflix. So Netflix is trading 328. The large ownership funds, look at American funds is all over every one of these stocks. So buyers out here, you had Susquehanna, 1 million, Bank of Montreal, 1 million, JP Morgan, 900,000. You get some decent numbers coming across. Sellers, ooh, big sellers, look at this. So this could be interesting. Now this is almost like Apple. You can see Netflix, T. Rowe Price, 4 million. Capital Group, 4 million. Viking, 2 million. They sold 3/4 of their shares. Wellington sold 1.4 million. Let's go. Let me look at this here. And so Netflix, yeah, bottom line, he's still at highs. We bring this back to March. Let's see. So this filing is the end of March 31st. So March 31st, we were trading at, there it is there, 275. So bottom line, you start in January. Let's start, you go to January 1st. Yeah, they could have made a lot of money. January 1st, you were down at 201. So $201 up until the 31st of March, 295. That's a big number. Google. Let's go take a look at Google. We hadn't done Google yet. And Google, that's trading at 1,081. Numbers go like this. You have buyers, Magellan, that's Fidelity. They're coming in with 1.8 million. American Capital, 1.3. Bunch of others, 800,000, then 180,000 a pop. Sellers, that's going to be a little bit dangerous. And Fidelity's a seller. Fidelity was the largest seller, as Mass Mutual. Hey, if you want to see something too, depending on how long you've been listening to the program, here's where all these guys are lined up. So Fidelity, Mass Mutual, State Street, and Wellington Management. They're all right in the top 10. You have Fidelity, sold 1.3 million. They get 11 million left. Mass Mutual, they sold 836,000. They get 976 left. State Street sold 548,000. They get 11 million left. Wellington sold 310,000. They get 2.4 million left. It's pretty cool how this thing shakes out. Now, what happens, folks, is that when you tag, basically, you know, these guys don't have to talk. But bottom line is that I've noticed just for years, when one goes in, all the rest of these guys, most of the time, going in equities also. And when they go in, it's great. When they go out, it's a horror show. That's just how that shakes out. Because you can imagine, you're coming in with really good demand, and then guess what? When you start going out the other side, it's problematic. Let's just go over to, so you get Netflix. I want to go over to Microsoft and just see who's been going in and out of Microsoft, because Microsoft has, you know, we are up at highs on Microsoft. So Microsoft out here coming into oh, look at that, good old Fidelity. They're not stopping. Fidelity in the last quarter bought another 38 million shares. They own almost 3% of it. Goldman Sachs came in with 8.5 million. TCI fund 5 million, Barclays 5 million. You get a lot of 5 millions, 4 millions, big numbers. That's on the buy side. Big numbers on the sell side, though. Look at this. Here, right at the top of the deal again. Wellington is getting out. They sold 25 million, have 91 million left. State Street, 14 million, 290 million left. State Street has a huge amount of it, man. 3.78 million. What that might be at State Street, too, that's a... They basically hold equities for basically, it's like a trust. Oh, I see what's going on, too. 1 second, let me just do this. See how many other funds they got. Yeah, no, they're holding it in 2 funds. That's quite a number, though. There's no doubt about that. Let's go take a look at Intel. See who's running it. Oh, I know what we want to do. We want to look at NVIDIA. That's what I want to look at, because NVIDIA, you talk. So NVIDIA is in a 50 or 50-point consolidation. Let me make sure that NVIDIA, that consolidation at the top, yeah, it's $250 down to 204. Yeah, it's a Okay, so NVIDIA closed there at 246. Buyers, Bank of America, D.H. Shaw, Bank of America 2.5 million, Shaw 1.9. Then you have a lot of 8, 5, 6, 600,000 at a pop. Yeah, and the sellers there too. Interesting. Lots of 2.6 million, 2.5 million, 1.8. When you just look at this off the top hand, it looks to me that you absolutely have more sellers than buyers. And when you do look at this again, what you're going to see is, you know, the good old State Street, Wellington. I don't see. Well, let me see the other side. I don't see Fidelity in here, meaning selling. I don't see them that they even own any. That gets interesting. Yeah, I don't see that they actually own any either. Intel. Let's go take a look at Intel. That same type of chip space and see what we have. Intel closed at $54.50, and with Intel, yeah, your buyers are Fidelity. Fidelity 16 million. Fidelity doubled up their position in Intel in the last quarter. 16 million, then you get like 5, 5, 5, all the way down 5, 4 at a pop. Sells though are large. Now here's cool. This is cool. This is. Now, you don't see this a lot. Let me show you this. Fidelity came in and bought 16 million shares. It looks like they doubled their position, right? And this is what is unusual. Wellington starts selling their position. Most times, and so did State Street. Most times you see them on the same side of the line. You're not so the bull bear is out there inside Intel. Stay right there, folks. Come right back. Don't forget Dave's workshop. You can sign up right now, right in the front page of TFNN. It's going to be coming up in 10 minutes, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And tomorrow morning, I believe 7 o'clock, let's take a look at this. Yeah, 7 o'clock in the morning, Walmart's going to come out with numbers. Walmart closed today $86.13. Bottom line is that this has been quite a downdraft. Walmart was at $109 3 months ago. We take a look at this. Let's bring this back. Oh, that's intriguing. Oh yeah, but no, Walmart's an ABC down. Okay, this is going to be this is going to be great watching how this shakes out, because Walmart 104 to 84, you get $20, which would get you a $70 setup. So we'll see how this shakes out. But the way this is, what Walmart had done last week, it broke a B point of an ABC down, broke it with volume, sets up a $70 number. You're at 86. 70 is where Walmart had traded, let's see, in June of 2017. Let me put this on a monthly. Yeah, and you're back inside the lower range. Once you get back inside 90, you're back in the lower range. And what Walmart does have is that it has high volume off the high. Hit the high in January of this year, 109. Made a high with 169 million, comes off the high with 307 million. And what that sets up, folks, that sets up lower price. So 7 o'clock tomorrow morning, we're going to know where Walmart stands. Don't forget, folks, I'm Mr. Dave White. He's going to do an outstanding workshop for you. If you're quick, you can come right over, sign up right now. That workshop is going to start in about 7 or 8 minutes right here at TFNN. Now, if you can't make it live, folks, don't worry about it. You can still sign up for it. You get either one of Dave's newsletters, 30-day money-back guarantee. Bottom line is that this will be on your page for 30 days. What that workshop is going to be about is option trading near expiration, analyzing swing trades. What Dave's looking for, folks, he's looking to basically put $1 to work or a quarter to work to make $1 to make $3 or $4 right at option expiration. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.